Hey, good afternoon, everyone, and welcome to today's webinar on maintaining operational resilience, brought to you in association with the Payments Innovation Forum and fscom. My name is Diane Brocklebank, and we're delighted that you can join us today. And as we all know, operational resilience has never been more important, especially in the face of evolving regulatory expectations, technological advancements, and of course, emerging risks. So today we'll be exploring the key strategies for maintaining resilience in this increasingly complex environment. Before we begin, just a few housekeeping points. Firstly, this webinar is being recorded and it will be made widely available after the session. If you have any questions as we go through, we do encourage you to participate. So please don't hesitate to either use the chat function or the raise hand function if you have any questions. It's now my pleasure to introduce you to our speaker, Greg James, Head of Advice at fscom. Greg, we're delighted to have you with us today. Over to you.
Thanks very much, Dan. And yes, thanks very much, everyone, for joining the webinar. Just as a bit of context, the reason we wanted to do this webinar was really, obviously, the operational resilience deadline is fast approaching. And the Dear CEO letter released by the FCA at the start of the year again brings up operational resilience as a core area for payments and e-money firms. So really what we wanted to make sure of is that we were making sure that we discussed with the PIF group operational resilience and sort of some of the common areas of improvement that we come across, because principally speaking, I'm sure everyone here is sort of sick of hearing operational resilience and how you implement it and things like that. Really what I want to do with you today is do almost like a bit of a benchmarking with yourselves and run through some of the key areas where we see with firms on areas where they could improve their approach. And hopefully that is of interest to everyone. Of course, as we were saying, if you have any questions at any time, don't hesitate to put up your hand or put a question into the chat, and happy to respond to them in turn. Super. So we're going to be going through a few steps today. First off, just for everybody on the call, I will just be recapping the journey. How did we get operational resilience? Where are we going to? What do we have to have come March 31st? We'll do a little bit of a poll, and then I will go into some of the key areas where we see opportunity for control improvement. And hopefully, if you have any questions around that, feel free to ask at any time. We'll do a second poll to get the temperature in the room, and then we'll talk about potential actions that can be taken. Perfect. So for those of you who don't know, I'm from fscom. fscom is a governance, risk and compliance consultancy business. We are a firm of deep domain experts, and we specialize in asset management, capital markets, digital assets and payments. I'm coming at from quite a payment-centric perspective. That is primarily my key focus in fscom, is assisting our clients with getting authorized and staying authorized in the payments world. As part of our position in the market, we have been communicating with clients on operational resilience for quite a while now, since 2022 at least. We've been discussing with firms as they start their initial journey and are now coming towards that journey becoming BAU, or business as usual, rather than the implementation phase firms are still working through at the moment. And really throughout that journey, we have been conversing with our clients and conversing with other entities in the market. And we've built a bit of a view of some of the key focus areas from the industry, and we're going to be bringing that in today. So any of the benchmarking I go through today is established from that world. Very, very quickly for myself, my name is Greg James. I am the head of advice in fscom. What that principally means is I assist firms with getting authorized and staying authorized. Principally, I've been focusing on operational resilience since about 2022. And have been helping firms with that implementation phase, as well as regulatory health checks to make sure that they're on the right path. So that moves us on to our very first poll, just to get the temperature in the room. So how confident are you in your operational resilience approach? Very confident, confident, neutral, not confident, or completely not confident? We just have the responses coming in there, so I'll just give it a few minutes while they all trickle in. Responses. Okay, so I trust everyone can see how that's trending at the moment. Principally, everybody's feeling fairly neutral about it. Not a huge amount of confidence or non-confidence here, and that tracks with what we've seen in the market. There is no doubt certain areas which you're very confident about, certain areas where some of these concepts are a bit new, they're a bit strange, and how they've been implemented. There still needs to be almost a bit of a calibration session on that, and that would not be atypical in the market. Okay. So very, very quickly, I'm going to go through the journey. Okay, so obviously, the operational resilience guidelines have, policy statement and subsequent rule FCA handbook changes have been in for quite a while. It is expected that you have an operational resilience framework that is currently operating at the moment. Really, what's happening here come the 31st of March is that you are expected to be able to stay within your impact tolerances. So we've defined our impact tolerances under each one of our important business services, and we can stay within them, and we can evidence that we can stay within them. That's the big change that's happening on the 31st of March here. So principally speaking, everybody should be familiar with these concepts. Nevertheless, just to make sure that we're all starting from the same base, I'll run through the common journey and the common operational resilience framework that exists in the market today. So first off, as with everything when it comes to compliance, it starts with governance and engaging key stakeholders. So compliance don't just hold all the responsibility for this. This is a company-wide framework, and it needs stakeholders from a variety of functions in order to work effectively. So we're really talking about setting up your core documentation. That includes your mapping, that includes your self-assessments, and understanding your management information, how that flows into your system, your key reporting lines, who's responsible for what, and at the end of the day, the board approving this approach, right? That's really what we're talking about here when we talk about governance. Is it encapsulates everything else. Do we have clear communication lines, and can we show clear approvals? Is effectively the exam question there. We will have identified and mapped our important business services, and effectively an important business service is a service provided by your firm or by another person on behalf of your firm to one or more clients of your firm, which, if disrupted, could result in intolerable harm to those clients or pose a risk to the UK financial system, right? It's a pretty broad definition, and it could end up capturing services that we wouldn't necessarily tactily consider important business services, but it is relatively broad, and it is something that the industry has been grappling with for quite a while. And of course, you then need to map those. So you need to understand what are the interdependencies that allow that important business service to work. How does this actually all stitch together into an operational function? And that lets you understand then what the effect of certain scenarios would be, and it lets you understand where your vulnerabilities lie and how you might remediate them. You're expected to have set impact tolerances to all your important business services. What that really means is if you see impact tolerance, almost think risk appetite, right? What are you willing to accept when it comes to a level of disruption? So think of your impact tolerance as the maximum level of disruption to that important business service that you are willing to tolerate, or that your customer is willing to tolerate. That's probably the best way to think about it. Need to develop threat scenarios and execute testing. So once you've mapped your important business services and once you've set impact tolerances to those, you need to be able to run them through scenarios. You need to be able to show that if a severe but plausible scenario impacted either one or multiple important business services, that you can stay within your impact tolerances there. Once you do that, that will help you identify vulnerabilities and assess the risk that underlies this. And then that, of course, generates into a remediation plan. How do you fix this? What are the resources that are required to fix it? How does this project plan look? And who needs to sign off on it? And then, of course, it all forms back into your annual cyclical structure. When is that tested again? When are you reviewing your important business services? If there is a product change, does that need to be revisited? If you have a change in permissions, does that need to be revisited? All forming part of an understanding of how the business operates, and that this framework doesn't end up in the back of a cupboard somewhere and never picked up again at post March 31st. Before I move on from that, does anybody have any questions on sort of the journey so far and where we are at the moment? Happy enough? Perfect. So what are some of the common areas of improvement? So as I was saying at the start, we've generated these lists from interacting with clients, either through ad hoc advisory or regulatory health checks. And these are some of the common areas that come up. These are certainly not the only areas that come up, but there's some of the common areas. And I think, there's potential. Some of them may apply either to people on this call, or potentially they are just something that you want to just validate in the background. But hopefully you will find this useful anyway. So when we do reviews, there's often a time in which there's no clear operational resilience strategy, complete with goals, objectives, remediations, and resource requirements. So really what we're talking about here is, if we don't set a clear strategy to this, there's no clear tone from the top, and there's no clear resource requirements. So if we don't set that immediately and understand who owns these tasks and what the goals and what the objectives are, and have a clear output of that on what resources are required to deliver it, then what will end up happening is that compliance are sitting in the corner trying to do it on the side of their desk. And that often leads to issues when it comes to implementing, and it often leads to issues when it comes to reviewing and making sure things are up to date. So that is something that is well worth considering. Effectively, what needs to happen there is to make sure that we have a board level strategy document that sets out our goals, objectives, and resource requirements. And that will let us make sure that we maintain and improve our resilience posture on an ongoing basis. Our second point here is ownership of operational resilience is often the head of IT or the head of compliance. Now, that is not necessarily incorrect. However, what we have found is it has defaulted to these people, and whether they are actually the right people for that role. So typically, we would advise firms not to have this sitting with the head of compliance, because they're a second line role, and that creates blurring of lines of defense and does create a governance issue there. Where it is a frontline member of staff, say the head of IT, we should be careful that it is somebody who has an overreaching and a wide holistic understanding of the firm itself. Not saying that the head of IT wouldn't have that, but actually tactically the more relevant person for this might be your head of operations, because appreciating payments, often fintech, often technology focused. Actually, the head of IT might be the right person for that. But there are wider points here that we need to consider rather than just IT. We need to be able to map the people, processes, and interdependencies that exist here. They are not always technology focused. They can be very operationally focused. And that might actually lend itself more to a head of operations or a chief operations officer. At the end of the day, every firm is going to be slightly different here, but it is well worth considering whether the ownership structure of those operational resilience framework is appropriate for your specific firm. And really what we're doing there is we're just making sure that we're clear on who the owner is there shared ownership of any documentation or shared ownership of any controls. If there are, it's really clear who is responsible for what aspect of that control or that document. Otherwise, you will have crossing of lines. It will become very difficult to actually assess the accountability in place here. And then finally, on the governance cycle, we have relationships with third parties do not have clear ownership. Now, third parties is relatively broad. It's obviously broader than our standard outsourcing ownership. However, as part of the outsourcing guidelines, all of your outsourced entities should have a clear owner. So that shouldn't be a huge uplift, but it is important that all of those third parties, especially the third parties that are critical or a dependency for an important business service, do have an owner. And that comes into play in quite a few different points, one of which is if there are any issues with meeting service level agreements with a third party, if there are any issues in if they are, for instance, if it is a technology provider and they are not informing you of scheduled maintenance and that's causing dependency issues. These are all things that we need to be aware of, and somebody internally needs to take ownership of owning that of owning the communication between yourselves and that third party. That actually probably most often crystallizes during a scenario test, which I will touch on later, but just to give a bit of a flavor, one of the most common issues when you run a scenario test is nobody knows who owns the relationship and nobody knows how to contact the key contact within that third party in order to involve them in the scenario test. And that does quite often crystallize. It seems obvious speaking it out loud. Unfortunately, it is just one of those points where if you are not crystal clear with people, it will fall through the cracks. Before I move on from the governance cycle, does anybody have any questions on that? Clear enough. Okay. That leads us to our important business services. Getting this stage right is the cornerstone of everything. Every other aspect of your operational resilience posture comes from your accurate identification of important business services. That is where everything else stems from. It's where your impact tolerances stem from. It's where your scenario testing will track through, and it ties naturally back into all of the interdependencies and all of the mapping that exists there. So if you get this right, that is you on the path to success. If you haven't got this quite right, that's where issues start to crop up, not just here, but in the entirety of the framework itself. So one of the common areas of improvement we've seen is not being able to fully evidence what business services are important and which ones are not. Or substitutability is utilized as a sole reason to de-scope potentially important business services. The FCA in their CISC 15A guidance and rules have outlined the areas that should be considered when you are assessing whether a business service is important or not. The only way you can evidence that a service itself is not important is by proving out that it isn't through the use of those considerations, right? And being able to document and evidence that. Otherwise, the issue you may come across when a regulator knocks the door or when an auditor knocks the door is that you are not able to evidence why certain services are not important and why you've decided to de-scope them from that identification process. That is quite a lot of work, and it is something that should be considered. Unfortunately, just the fact that a customer could substitute your service cannot be the only reason why something is not an important business service. That will not stand up. The FCA has called out in their good and poor practices released tail end of last year. They have called this out as being something that firms are trying to do and that they don't agree with. So this is something well worth considering. Now, what this really means is you need to identify all of your business services, de-scope the ones that are no longer important by running them through an assessment, are not important and do not present as important. And then that gives you finally the list of important business services, which you then have to map. Evidencing that out is going to be critical in order to give the regulator and give auditors assurance that that has been thought about all the way through the process. The other point here we have is the IBSs are set at a high level, resulting in mapped interdependencies, creating weak links. Now, that probably sounds a little bit confusing, so I'll give a bit of an explanation around that. When the initial timelines and the initial deadlines for operational resilience came in, firms rushed to get their important business services identified. They wanted that list of important business services because that got them over the first line of compliance when it got during the phased approach of the operational resilience rules. Now, what that meant was that the important business services were quite high level. Payments in, payments out, things like that. Which is absolutely reasonable, understood that positioning, and I'm not saying that that is necessarily incorrect to set them at a high level. What I'm highlighting here is a potential issue you may come into, which you may have identified yourselves at this stage, or if you're still during that scenario testing, you may start to realize that in your lessons learned, is that if you set your IBSs at a very, very high level, you end up bringing in a huge amount of interdependencies, and those interdependencies now become weak links. So for instance, if you have your IBSs tracked out and you have, let's say, payments received as one of your key business services. Let's say you have decided that the customer's ability to report fraud to you is not an important business service. Okay, but it is a regulated service. You must be able to have an avenue in which the customer can communicate with you about fraud, which means it has to become an interdependency of your payments in. Your fraud services, likely running through the phone or running through a communication via the app, will have very, very different RPOs and RTOs, or recovery time objectives, recovery point objectives, than what your front-facing portal will have. And you are now, because you have pulled fraud into your important business service, you have pulled that in. It's now become one of your impact tolerances, right? The issue you come across here is if the fraud system fails, then your important business service on top of that has naturally failed. And it's going to be very difficult for you to match off what you would consider as an impact tolerance on your fraud level and what you would consider your impact tolerance of at no point can a customer actually send a payment. Therein creates a bit of an issue. And it means staying within your impact tolerance actually becomes really quite difficult once you start to scenario test out these things. Now that's that can be quite confusing sometimes. So does anybody have any questions on that, or does anybody need any clarification on that? Okay. Perfect. Really, I'm not saying you absolutely need to do this, but what I would encourage firms to do here is to consider the granularity of their important business services. It creates a lot of work at the start. The issue you're avoiding is those potential interdependency risks. I saw a hand pop up there very quickly. I'll go back down. Steve. Yeah, you're muted, by the way, if you're speaking.
Yeah, hi, Greg.
Thanks, Steve.
Yeah, I just put a message in chat there about your first point about a base level. If there's a base level of assessing every single process to determine whether it qualifies as an important business function, and that links to what you were just saying there about being able for customers to be able to advise of fraud. So you may have a number of different channels for customers to contact you, and if one of those is down, but your primary contact is your call center, for instance, then would for instance chat, you might have that as an option for customers to contact you, but you wouldn't classify chat as being an important business service.
No, I think what your important business service there, Steve, is likely the fraud reporting line, and you'd have natural inbuilt resilience if you have a variety of communication methods, right? And those communication methods have been built in there because certain customers prefer to communicate you in certain ways, right? But it nevertheless generates a natural resilience point. That filters through once you start a scenario test. So let's say the scenario test is that there is an issue with the app or the portal and it goes down. Okay, well, that hits our app, but it actually didn't affect our phone lines. People can still phone in and question and communicate with you, and if they have any questions, or potentially, depending on your structure of your firm, potentially even instruct payments that way. Not always the case for e-monies and things like that, more of the case for FX brokers and those sorts of business models. So that tracks through on a sort of a resilience and scenario testing point. I would try to avoid more granular IDSs, but I would try to avoid breaking it down into each communication line, because your IDSs will be 50, 60, 70 long, right? It becomes very difficult to get that balance right. Does that answer your question?
Yeah, it does. It does. I guess it was coming from the point that you made earlier, and the key point on the slide here is that you need to identify all business services through customer journeys. And the example there you gave about fraud, and there's two channels there, or multiple channels that somebody can actually contact. So it's critical that they do have the ability to contact and identify any potential fraud. But if only one of those communication channels is down, are we having to, basically what I'm saying is, are you mapping the service, which is the ability for customers to contact us, or are you mapping the individual routes that they can contact us?
At this, if it's something you haven't mapped at this stage, stick to service level rather than every single communication route. Obviously, it would be nice and ideal to have every single communication route, because that lets you track through interdependencies a little bit easier. But when it comes to using a customer journey to identify important business services, I would probably settle more into the line of fraud communication has been identified within that. The interdependencies of that are our telephone lines, our app communication phase.
Yeah, makes sense. Thanks.
Perfect. Does anybody else have any questions on that before we move on to the next slide?
Yeah, I do.
Oh, yes.
I'm sorry. Yeah, I've just put one in the chat. One of the debates we've been having internally is whether the ability to onboard new customers, which obviously involves things like KYC, address and identity verifications, PEP checks, sanctions, all that kind of thing, whether they are considered important business services. Now, they're regulated services, but are they considered important business services from a resilience perspective? I think the counter debate is that if we're not onboarding new customers, that does not adversely impact our existing customers and does not cause them harm.
Yeah,
I just wondered if you could give a view on that.
Yeah, I typically would de-scope onboarding. The reason I would de-scope onboarding is because IBS is defined by there having to be a client, and they are definably not a client until they're onboarded, right? Now,
Yeah.
That being said, you from a business continuity perspective, you'll want to keep an eye on that, right? Because if you don't have new customers coming in, you don't have revenue growth, that becomes a massive issue. But but this we're really talking about, say that your onboarding system could go down for a week or two, right? And it's not the absolute end of the world. It's absolutely not great, but it's absolutely not the end of the world. Whereas if your payment system went down for a week or two, you'd have a knock on the door from the regulator.
Yes. Okay. Thank you.
Super. I think we saw just a hand up there. Yes, Roman.
Hi, Jack. Actually, my question was in conjunction with the previous one, is how to identify the important business services, because one of the paragraphs says that we need to apply these in provision to payment services. So can we start from the permissions we have from the FC and unroll the consumer journey based on these specific activities?
You can absolutely start there, Roman. If you talk to 6 different people, they'll give you 6 different ways to start this. You can start from the permissions. Personally, I prefer to start from the customer journey, because the exam question that operational resilience sets us here is in the context of the outside looking in. How does the customer interact with you, and what does the customer require from you in order to interact with your services, right? So how do they actually journey through the system becomes a really, really good starting point for understanding how do customers actually interact with us and what is critical for them to complete that interaction. And then you can start to limit that by introducing permissions and what's a regulatory service and what's not. And that lets you condense it down a little bit. So I do prefer to start at a customer journey. That is principally just because that perceptively, that makes sense from the customer side. Does that make sense?
Yeah, that makes sense. Thank you.
Super. Any other questions before I move on from important business services? Okay. Super. That leads us on to impact tolerances, which I have mentioned in important business services because they're so intrinsically linked. But to focus a little bit more on them, more often than not, firms utilize historic recovery time objectives rather than as an informative point for their impact tolerance. But often what they do is actually just mirror it for an impact tolerance. That causes a few issues, most notably of which is traditionally recovery time objective is when your system comes back online. Impact tolerance would have to be when the service comes back online and you've worked through the backlog. And working through the backlog obviously takes a longer amount of time. So if your RTO was 4 hours, your impact tolerance is actually probably 6, 7, 8 hours. So just a bit of caution on utilizing RTOs. They are a useful tool. They are more focused in the traditional business continuity world. We do need to do a little bit of transformation on those numbers in order to make them fit into an impact tolerance. Impact tolerances often lack evidence, and rationale, potentially resulting in miscalibration. So the FCA have actually set out how they want impact tolerances to be calibrated. And for clarity's sake, you're doing that before your scenario testing. So you are effectively, through the data that you generate on the business, you're picking data points and you are understanding how important is this service, what's the nature of the client base, the number of the clients that are using it, is there any potential for financial loss on those clients, in order to calibrate what actually is your impact tolerance here. And often firms kind of, we set that at a time-based metric, and a time-based metric should absolutely be in there. What might be helpful is breaking it out into a variety of different metrics. For instance, tying that back into the major incident reporting guidelines. So 25% of your clients are affected, 25% of your transactions are affected. Something like that might help you set an impact tolerance that is just a little bit easier to map back to what the FCA is expecting here. And it might just be a little bit easier to take it away from just the time-based metrics, because the issue with the time-based metrics is they become very difficult to actually scenario test. So for instance, if you've suffered a recent downtime on your either portal or your application, chances are it was not a full outage. Chances are it affected 25% of customers, maybe 75%. Really what it was the response time wasn't happening quickly enough, so it naturally timed out. Some clients were getting through, some weren't. When is it actually considered downtime? Right? When is it actually considered this service is not operating right? And unless you bring in other factors in there, it becomes quite difficult to scenario test and to understand whether you stayed within your impact tolerance. Because staying in your impact tolerance is absolutely key, because of my last point there, which is lack of reporting processes to activate if the firm fails to remain within its impact tolerance. If you cannot stay within your impact tolerance, the FCA are expecting a notification under Principle 11, open and honest with the regulator, which is obviously quite worrying, in the sense that you don't necessarily want to throw the flag up to the FCA if there's nothing necessarily to worry about. So calibrating those impact tolerances is critical, because if you do have an incident and you fall outside your impact tolerance because you were too ambitious, that's a reportable breach now. So that is something that is well worth considering, and making sure you have a process for understanding when that impact tolerance is breached and when you need to report to the FCA, and what the governance processes you need to do in order to do that. Really, really key to get right. Does anybody have any questions on impact tolerances? Roman?
Yes. Yeah. Sorry. Yeah. A question about the aggregated time-based metrics.
Mm-hmm.
So when we have like a few outages, all of them below the tolerances we have set, but combined they present intolerable time when the service was down. And the regulation, I think, is quite clear that there's no aggregation is applied to those. What would be, your advice on this?
When you say there's no aggregation applied to those, sorry, Roman, can you run through?
Yeah. I think the regulation is quite clear, saying that no aggregation applied to these tolerances. So if like two cases are happened within 1 week time, they are treated as two separate instances.
Oh,
and
yes.
If they are within the tolerance limits, they're not reportable, even they create such a disruption for the end customers.
Yes, I agreed. Sorry, what's the point of clarity you're looking for here? Apologies, Roman.
And what would be the best advise, how to set those tolerances, and keep in mind that we don't want to have a series of incidents within the a set time frame. So the idea from our team, the operational team, because we do have the SLA in place, so we have a combination of metrics, the time for a specific incident, but also some specific metrics for the a 12-month period.
Yes. So if you are going to set impact tolerances and metrics behind that, and you're going to make an aspect of that time-based, right? Do try to balance that out with other metrics, right? So, and also consider when that downtime is actually happening. If you have 4 hours of downtime between 12 in the morning and 4 in the morning, that isn't an issue, right? If you have that during business hours, that might be an issue. So that's something that you're looking for in there. Another element you might be looking for is, when does the incident actually end? So is this a brand new incident? Is it not? So what you'll be wanting to do there is you'll want to be able to get back into a point of minimum viable service so that you can close off the scenario and say, this has been one incident, and you don't want to activate another incident in there. Now, that's probably not your impact tolerance. That's probably more in your definition of an incident or a scenario. But that's what you want to do in order to separate that out. When it comes to how you actually calibrate these impact tolerances, what you should be looking for are certain data points on how your service actually works. So how many customers are using it? What are they using it for? What are your target customers using your service for? Is it critical for their day-to-day spending? What are they? Are there any new emerging risks that might affect this area? Are there any new developments on a regulatory basis that might affect how these how people interact with your service? And then you're effectively setting your appetite around that, and you're basing that off what you've seen in the past. If you had an incident that had your system go down for 4 hours and the board did not accept that level of impact, then your impact tolerance has to be under the 4 hours, right? So it's about building in that data. Did that answer your question, Roman?
Yes, that's it gives me some clarity on that. Thank you very much.
Perfect. Does anybody else have any questions? Okay. Perfect. So, mapping and third parties. So this is the downstream of identifying your important business services and your impact tolerances. And that is being able to map out what makes these services tick. How does this all work? So principally when we come into firms, sometimes what we find is missing operational processes and information from the mapping documents. In other words, an incomplete view of the dependencies. So what we find is mapping is typically quite good on the technology and the third-party side. So which third parties do we need? What technology do we need to make that work? It's actually quite difficult to track through exactly what processes are happening here and how they work. Which people are needed in order to make that work? And what information needs to exist and be accessible in order to make that work? Those are probably the weaker areas when it comes to the mapping exercise, principally because, or seemingly because, technology and third-party management have been quite high on regulator regulator priorities for a number of years. Third-party management and supplier management has been on the FCA's radar for quite a while now. So those are areas where firms have focused more in on. It was absolutely a requirement here for us to be able to show all of the operational processes, people, and information that we need in order to pull into this, not just the technology and the third parties. Third parties are difficult to contact and or unclear on the commercial expectation placed on them. This really comes back to traditional third-party risk management, and that is, in order for a third party to be servicing you in a way that will give the regulator comfort, they need to understand the onus on them. And anybody who's done a significant amount of third-party management will be well aware of the difficulties in managing that third party to get them to understand. We appreciate this is not a regulatory obligation on them. However, because of the regulatory obligation on the firm, we have placed commercial obligations on you, and if you do not hit those, we will have a issue with that, and there will need to be conversations. They will need to engage in the process. The more you bring third parties along on that understanding, the easier it will be to actually work through a scenario with them. The lack of reporting processes to activate if the firm fails to remain within its impact tolerance. Oh, that's a copy from the last one. Only two there, apologies. But those are really, really critical ones. They are quite important from the sense of these are your downstream. If you get your important business services right, if you get your impact tolerances right, these stem from that. But we do still need to get these right because they are so critical when it comes to actually scenario testing and understanding how you get something back online when it needs to be back online. Does anybody have any questions on that? Okay. Testing. So testing is the critical part here. Everything else is assumptions until you go through a test with it. And principally speaking, sometimes what we have seen here is that there's only a selection of important business services that have been tested and the firm can evidence maintaining within impact tolerances. By the 31st of March, we need to be able to show that within a series of severe but plausible scenarios, all of our impact tolerances can stay within, all of our important business services can stay within our impact tolerances. Really, really important. Typically, that test is desk-based, which absolutely fine for us to run desk-based testing. It is something you might want to consider whether there's any opportunity to do simulation testing or any other testing strategy. But the typical approach from the industry at the moment is desk-based testing, and that is, as long as you're testing all your important business services, that is sufficient for our purposes here. Critical third parties not involved in testing exercises. Now, really what that means is when you're running something like a desk-based test, typically what's happened in one of those desk-based tests, if you're running a certain scenario inject, there is an impact point, and that impact point will affect a series of important business services that by nature impacts the third parties who are supporting that. And you might need their help to get those systems back online or get those processes back up and running. You need to be able to communicate with them. You need to pull them into that process where possible. If you have critical third parties, they should be involved in your scenario testing, because otherwise what will happen is you'll be very well versed on what you need to do during the scenario, but your third party won't. And it's always at the weakest link in the chain that these things fail. And if your third party doesn't know what to do with it, if you're hitting a contact center that doesn't know how to react to it, that will cause you critical time. It'll cost you critical time, and that could end up meaning you fall outside your impact tolerance. And then scenarios selected are effects rather than scenarios. So pick a scenario. draft a scenario library of likely, well, not likely, but severe but plausible events based off what you've seen in the past in the business, based on what you have seen in the wider market, and then use that to test your important business services. Try to avoid scenarios that are things like AWS is down. Okay, AWS is down is absolutely could absolutely be a starting point. However, why is AWS down? Because the reason for AWS to be down will materially change how you actually run that scenario. Is AWS down because you have had a DDoS attack on your environment? Very, very different reason than if AWS has gone down because literally their warehouse of servers is not operating. Very different response, very different tolerance on how long that can go down for. So it's well worth making sure that that scenario is a genuine scenario. Does anybody have any questions on that? So how do we fail? You know, take another a bit of temperature from the room. We've discussed a few different points. We've touched on some of the key issues. Do you feel more or less confident now in your operational resilience approach? Okay, we've got 9 responses in there. Seems like we're trending for more confident, which is great. Just wait a few minutes while the last few come in. Okay. Super. Great. 70% more confident that in their operational resilience approach. So really, really good to say that these are things that you have seen before or that you're happy enough are, yes, those are issues that we've previously identified, or potentially they're not that you've previously identified, but that you think that you understand that your current approach, you can easily tweak that. And that's great. It's really good to hear that that confidence is growing. Now, that is the end of the presentation effectually. Now, really, I just want to touch on if you aren't confident, or sorry, less than if you aren't confident, but if you want a sanity check of your materials, one of the actions you can take is get a health check done, right? And a health check is effectively a regulatory run through of your documentation and your current controls, and a sense check of whether that is on the correct path, or if there's anything that can be improved, and also will help you just benchmark your service against your peers. Make sure your documentation is up to scratch. The very first thing a regulator will ask for is your documentation around a point. So it's well and good to have a good, solid operational resilience position. However, if you can't document and prove that out in documentation, you will be getting more specific questions from the regulator because they won't have the comfort from your documentation. If you get your documentation up to a good, mature standard, you will avoid a lot of headaches down the line. And then make sure you're learning lessons either through your scenario tests or through any other real life events that might happen either to yourself or across the industry. Pull those actionable data points into your operational resilience approach. Make sure you're keeping this alive document. Make sure this is now BAU and you're building off the structure you've built at this stage. Does anybody have any questions? Okay. Super. Perfect. Well, listen, thanks very much for your time, everyone. Really appreciate it. Hope you found it useful. Hope you found it, if not useful, at least interesting. And if anybody has any questions, don't hesitate to reach out.
Thanks, Greg.
Thank
It
you.
was very interesting.
Thank you, Greg.